There are a few basic things I could tell you about silver. We could look at a breakdown of global mine production. We could go over the various uses of silver, the supply from Chinese mines versus Chinese fabrication demand. We can discover that global silver inventories are dwindling, that the silver market is tiny in comparison to other commodity markets. But what does all this information really mean? What do we need to know? Supply and demand.
I think supply and demand, that's a wonderful question. What is supply and demand?
Yes, supply and demand is the way of looking at how prices are determined. Basically, people compete for what's available. And the more competition there is and the less product there is, the more expensive it will be.
You know, you have some farmer that's producing some wheat and he's delivering it into the market, that's supply.
Clearly, if you have higher price, there's more and more people willing to supply the good or service. And if you have lower and lower price, you have more people willing to buy it.
The farmer, just before he goes to harvest, he has a crop failure. So now suddenly there is a shortage of wheat.
There can be the time when there is a very low supply of silver. So if the silver supply is dropping, then even if the demand stays constant, you've got high prices again.
I mean, that's so simply said that you wonder why nobody really fully understands it.
If you go back on the fundamentals of silver, you know, I'm talking physical silver, in 1990, we pretty much peaked with about 2 billion ounces of fine silver above ground.
Where supply and demand gets interesting from my perspective as a trader is when you have some imbalance in this supply and demand.
So right now, I'd say there's probably 1 billion ounces, or roughly half of the amount of silver that was available, say, in 1990.
Now, we all know what happens. You know, it could be your grandmother in days gone by when there's a shortage of sugar, or even just a perceived shortage. And demand not only stays the same, but it ramps up. So you get a much dramatic change in the price of something.
Oh, there's more and more industrial uses for silver all the time, and there's more and more demand for it because anything electrical, electronic needs silver, and as China's building out its infrastructure, they're using more silver per capita than ever has been used before.
So, does understanding supply and demand tell us all we need to know about the price of silver? Not quite. We are missing something. Us. We have discovered fire. We have invented the wheel, the computer, war, and art. Yet despite our brilliance, we have an uncanny ability to be utterly unpredictable. Our emotions are both a blessing and a curse, and we are behind the wheel of the stock market.
Of course, the way people view the world and the future and their optimism or pessimism is going to affect the stock market.
Clear your mind, which is actually your most important capital, okay? You can lose money, make money, but once you lose your mind, it doesn't work anymore.
When I got out of college, and I've always been fascinated by the markets and started working and, you know, looking at investments at a very early age, that all I needed was a strong math background and I could beat the market. Well, I got my head handed to me, as the expression goes, because it's not a math formula, it's a psychological formula.
In the markets that I trade, from time to time, speculative demand trumps, you know, is much greater than the industrial demand.
If, for example, it was found that if something happened today, prices will go up tomorrow, the prices will go up today in anticipation of them going up tomorrow.
Once I determined where I was making my error, thinking that doing good analytical research on what a stock's value should be based on the math, or how many ounces in the ground, or how many ounces you're getting per share, and all the stuff that makes perfectly logical sense. I mean, there's no doubt about it. I mean, there's an analyst I know quite well, I won't name. He does very good work in that area, but like I like to say, do you want to be right or do you want to be rich?
If speculators have a notion that the price of something should be going up, and they start to pile into a market, buying it, then the price will rise. You know, their buying causes their expectation to become true.
And who knows, I mean, there's a lot of emotion in going in there, and all the fear and greed.
The expectation of where prices could be going, because really nobody knows, but that expectation of where prices could be going will drive individuals and companies' behaviors.
When the markets are raging to the upside, the silver will go up faster. When the markets are taking a tumble, the silver will go down faster. So that's why, to me, the silver is more emotional than gold.
I mean, as I said, there's no fever like gold fever, but there's no panic like a silver panic. I mean, when it goes, it's going to, you know, I think it'll leave gold in the dust.
So, if we know that the stock market is driven by our emotions, how can we make sense of the price of silver? Well, as it turns out, the price of silver is tightly connected to the global economy. As the economy goes down, silver tends to go up. Why is that? Well, one could say that the price of silver never really changes at all. What does change is the price of everything else. Welcome to inflation.
Inflation in the beginning is a wonderful thing. There's plenty of money around. People feel good. They're, you know, spending money. They're happy.
You're convinced you're a genius. You're feeling good.
But these things never last forever.
If you increase the money supply, you reduce the value of the pre-existing money, and that's if it's we're the ones that are holding the pre-existing money. So when the central bank adds to our money supply, our money that we are holding in our pockets becomes worth less than before. It's a hidden tax.
Over the last 30 years, the GDP of the world has been greater than it would have been otherwise because we use more and more credit.
I mean, right now, if you look at the Federal Reserve Board's own website, they'll state that the 1913 dollar is now worth less than a nickel.
In the United States, for instance, say 04, 05, 06, that kind of a period, real estate prices were going up, up and away. You know, people who barely had a pulse, certainly didn't have a job, were able to get borrowed money to go and jump into the real estate market. You did not want to get left behind.
The problem with this is that it causes inflation sooner or later. And then people like to buy precious metals to protect themselves against inflation. If there's inflation, the price of those metals is going to go up in the future, so you make money, and that's how you can preserve your wealth.
Now, how high will silver prices go? You say, well, I don't know. I know that they hit $50 one day in 1980, but at that time there was 4 times more silver available for investment than there is now. I know that, you know, in 1980 silver went to $50 on one day, but there were only about 1/5 the amount of people available buying silver than there are today. Because now it's a global market. You can buy it in China, you can buy it in Russia, you can buy it all over South America, you can buy it in Mexico.
20th century was the age of the dollar. The question is, what's going to be the currency of the 21st century?
I'm worried in general that we're going to have pretty substantial inflation in the next 3, 4, 5 years.
If you don't trust this game, it's all built on confidence, it's all built on trust, and when you lose the trust, and we have, then you have to go to something you do trust, and that's what the precious metals are all about. There's no problem trusting something that's been proven to have value for basically time immemorial.